Hello, everyone, and welcome to another Smart Money Concept webinar with Ben and Roman. I'm Ben. Roman is the other dude on the microphone. How you doing, Roman?
Hello, I'm doing good. How are you?
I'm doing great. We had a great session yesterday in Amsterdam. It was quite a few people turned up, so that was very nice to see. People seemed really interested in the strategy. A lot of them had never heard of it. There were a couple of regulars on the webinar, so that was nice to see them in person as well.
That is good.
We don't know if Soda was there, but probably not. But
There was no chat, I guess.
there was no chat. There was a chat, but in real life. So yeah, that's that was fun. We did kind of like a recap of the strategy, like what are points of interest, what are fair value gaps, what are swings, what are shifts, all that kind of stuff, and then we did part of the backtest. The backtest went a lot slower because I had to explain a lot more because a lot of people were just really new to it. So yeah, I think it went really well, and yeah, if people are interested, we can do another session like that online maybe as well, where we can do another a recap session, I suppose, something like that. So if you're interested in that, if you're watching this, leave a comment if you're watching it back later. But yeah, otherwise just head over to the Academy page, alltrady.com/academy, and look for the Smart Money Concept webinar or Smart Money Concept course to see all the course material that we've created for you free of charge. All right, so what are we going to be doing today, Roman? In terms of backtest?
Yeah, today I thought that we can also try that higher time frame backtest.
Yeah, higher time.
So yeah, instead of the usual 4 hour and 15 minute, we can try again daily time frame with 1 hour entries.
Yeah.
And what was that? It was Link USDT from January 1st.
USDT from January 1st. Hello, Heidi. Remove drawings. Okay. Let's go to daily. Let's go to backtests. Set up a new one. January 1st. Oh, that wasn't supposed to happen. January 1st, 2025. Oh, I should have done it the other way around. Oh, well. Oh, well. January 1st. There we go. 10,000 USDT. Yeah, sure. Sounds good. All right, let's head over to the trade form. Set this one to 10 so we have some funds. Right. Okie dokie. How do you get the screen bigger? Heidi asks. Well, you have to go to the Alltrady channel and select the live stream with the bigger screen because you're currently watching the short stream, which is smaller. So if you want to watch it on the big screen, just go to the Alltrady channel. You can click on our name, then you go over to the live streams and you can pick the big version. Okay. So normally when we do a new market, we start at the highest time frame and we look for what has happened. So we can see ramp up, normal, new all-time high. Yeah. Then period of consolidation, going up, taken out, nothing really. Yeah, this fair value gap was just ignored. It reacted on this, so it swept this liquidity here, I would say. And then it had the reaction. Right? It took out this liquidity first, but it wasn't enough. It just went further. There were no things there. We have a swing low on the monthly there. That is the full fill of the fair value gap. So that's why that moved. So it moved from this fair value gap swept that liquidity, and then move back up to these top levels. In the meantime, it created a fair value gap. So this point is the start of a fair value gap. But it's a large box. So I think I'm going to skip this one on the monthly because I reckon there's going to be more points of interest on the weekly as well. What do you think?
Yeah, of course. So far, it's pretty much everything that you've covered.
Right. So on the monthly, my expectation would be more correction to the downside. Perhaps a continuation to the upside after that. But this reaction is quite strong. I don't know on the lower time frames. On the lower time frame, it might have already been that pullback, and we see some order flow happening on lower time frames. So
yeah, maybe you hide the backtest widgets so the chart is bigger. Yeah.
Yep. Yeah. So that's kind of like the expectation. We're a little bit in the middle. It can continue to go up, or it can take out this liquidity. There's some.
Yeah. So far, we can just say that this is quite a huge rejection.
Yeah, that's for sure.
Yeah, it was pretty aggressive sellout at this point.
Yeah.
So yeah, I would be leaning more towards the shorts at this point, but yeah, it can go up as well.
Yeah. Yeah, it's not a clear direction yet. Like it's not like you're here and you see these candles forming where you see that the price is moving towards these levels, right? That's not the case here yet. That could be next month or yeah.
And again, like if we were trading the 4-hour time frame, I would say that definitely this would be the target for the next month. But since we are trading daily time frame, it can be like it can test this one and go up, or it can test this one, then reject from this rejection block and then go down. Yeah, there's a lot of different scenarios.
Yep.
So for the short term, this fair value gap is definitely the target, but this is pretty close to the price right now. So yeah, we'll need to see what happens.
That's the only issue with these three candles here is that it opened there and it closed there. This is relevant, but in terms of this fair value gap, it's a little bit okay. And of course, we want to have some balance. So it's gonna test this block at some point. We just don't know if it's gonna be short term up or down. So that's why we have to go lower to see if there's anything more interesting happening. And now it becomes a little bit more clear that the price is definitely in some kind of downward correctional phase, and we see this nice fair value gap right here.
Yeah.
And that's why I didn't bother setting up the fair value gap on the monthly, because I was hoping for a nicer fair value gap on the weekly and maybe even further down on the daily. There's another one here. I'm just going to draw a line just quicker. It's a point of interest. We see no other fair value gaps. It's kind of similar. So this was there. I mean, this was taken as well. Not really a reaction of it. Maybe on the daily we could see some kind of correction here.
Yeah, it looks like there was something.
Yeah, because you can see this candle is quite big. It opened here. Maybe then it hit that and then retested and then closed there. We don't know. We have to look into a smaller time frame, but it's possible. Then obviously it took out this liquidity. This was a little bit of an interesting part, I think, because it did close above this line. There was a close, so you could say that it reached that level and then sort of like retrace and then go back up. However, it doesn't look, however, that didn't happen, and it just went back to even below this level. I suppose that this move was just too quick.
Well, yeah, it was almost 2 months, but it was pretty fast move.
Yeah. There's no red candle on the weekly.
Yeah.
And on the daily, so we took out this liquidity here, and then it's exactly as what we thought, right? That's nice, right? It's nice when you say that probably happened, by looking at that candle. So it took out that level, and then went down and went back up, and then continues to move up. That's nice.
Yeah, and you can see it also went into the daily fair value gap and tested it.
Yeah, it went into the daily fair value gap as well, and then a retest. So that could have been an entry here, actually. Yeah, if you did trading daily 1 hour, this could have been an entry. This would have been a very nervous entry because it almost took out your stop loss as well. However, it didn't. So if you had entered there, you would have been you would have had a nice profits. Maybe you would have set your target to this one most likely, or second target there. Then you would have done very well in a very short amount of time. Let's turn on the smart money concept indicator right now because we have landed on the time frame that we're going to be using. I just need to adjust it slightly. Let's say to the day. Normally we use 4 hours, but today we're going to be using the daily. So yeah, that's where we are right now. And we can see daily fair value gap. Yeah, that was entered. We see another big daily fair value gap. That's where we're currently in. But it was already tested, almost fully taken out. So kind of ignoring this fair value gap, but we can use this swing low as, well, it's a sell side liquidity. So that's clear. However, in this case, weekly was bearish. Like monthly was kind of indecisive. Weekly was bearish. Daily is bearish. So I'd be looking for shorts.
Mm-hmm.
Right? We're closing this this liquidity here, so it's closing below that. So maybe a nice like move up and then down towards these levels. That would be my entry. Yesterday we got a question from someone like, okay, so what do you do when you've got this setup? Like how often do you check this? Well, it's quite simple actually. You can just set time alert or price alerts. So you determine when you want to be alerted, right? So if you want to be alerted when it breaks through this swing low, you just set your alert to that. And if you want to be alerted when it reaches this fair value gap, you can set this alert. And now when this is done, you just wait because there's nothing else that's going to happen in between that's going to give you a different story. Okay, well, maybe in this case, in this true scenario, you would set it to the low point because if it's, well, no, in this case you won't because there's nothing, like you wouldn't use this as anything. So it has to break through this level or it has to break through this level before we do anything. So in this case, these two alerts are actually absolutely fine. And that's it. That you move on to the next market if you manage multiple markets, or you just go and do something else and just wait for the alerts.
Yeah, one really important thing to recommend is that when you watching multiple markets, you really want to add notes to your alerts because like one time I was analyzing like 10 markets and I set a lot of alerts for them. And then I wake up and see like 20 alerts on my screen and no notes at all. And I'm just so overwhelmed. I just don't even want to check them.
Yeah, it's definitely good to use the notes to notify you why this alert was happening. And once you've set the alert, you'll also see the note in here. And you can see it in your My Alerts widget, what your alert history was and what the note was with that. So you can watch it back to see which ones were triggered. So yeah.
Yeah. Can you also go back to weekly time frame? I believe you missed
Did
one
I
of
miss
the fair value
something?
gaps there.
Did I miss something? Maybe this?
Yeah, this one is pretty tiny.
Whoa, that's that. Is it even?
But
like,
yeah, on a weekly it is
18411. Yeah, there is. Like, it's hardly anything, but I mean, just drag it out there first and then lock it to that point. On the daily, we might see something bigger. Not really. Not really. But it is a point of interest.
Yeah.
So we could watch it.
I mean, when this happens on daily, it's not that important, but on weekly, it is a fair value gap. So you want to pay attention to it if you have something like this.
Yeah, because this means that if it reaches the weekly, then it could be that it's going to be taking this out, maybe with a sweep. And then we could see a move upwards. Right? That's what you were trying to say, right?
Yeah, exactly. And so you have the fair value gap on a weekly here,
Mm-hmm.
and you also have this liquidity and this liquidity as well. So you have a lot of liquidity build up before the fair value gap.
Yeah, because
and also you have the daily fair value gap there, right? So this small line.
Yeah, there are lots of reasons for the price to go there, and then also the weekly fair value gap is then a nice indication that price might correct. It's not a guarantee, of course, but there is a high probability that when it reaches higher time frame points of interest that the price reverses. Okay. So with those things in place, let's just continue with the candles and see where they're going. Okay, so we got our first alert trigger. So this is where you normally then start to pay attention and you switch to a lower time frame. So this there was a fair value gap. It's not visible here, but there should be like an entry possibility. It was on this level. So let me just draw the line so I know exactly where it was. Yeah, so we had it here, then we had a close. So here we did not have a clear shift yet, but we can. And this would be a nice entry actually, if we can get that. Is that the true swing low? Yeah, that is the true swing low. Okay, so let's go. That is the swing. Shift, sorry. Say it correctly. There.
Yeah, like I would say this would be the shift because of this liquidity and then move like this. But yeah, we could count this one as well.
Yeah, I'm counting that one.
Okay.
I'm counting that one. And if not, then we wait for the next shift, right? It's that simple. This is a nice. That's a nice 3. We're using 2% today. Can you believe it, Roman? I forgot to put the risk percentage in yesterday. So after we've done a few positions, I was like, look at the profit. It's 1%, which should have been way higher because it was using like a 0.2%. So actually, it should have been like 10%. And that was after like 2 or 3 positions with some losses as well. But yeah, I think people were they were just really trying to understand the strategy itself. So they weren't too focused on the profit itself. They could see obviously that the positions that were profitable were 3 times more profitable, at least 3 times more profitable than the losses. So yeah, that's all that mattered, I suppose. All right, so hourly, there we have a 3. So I'd say that that's pretty good. So I'm going to be entering and I'm going to be seeing that we've entered and then we get taken out. Oh my God. By just a couple of. Okay. Well, that's why we do stop loss. Let me see if your shift had worked. So you say this, so you shift here, then there wouldn't have been an entry. Okay. So maybe this is.
I mean, my point is that there was just this one fractal that kind of got swept, or this one, but then shift would be, there was no shift at this point. So this would be the fractal that got swept, and then the lowest point in between them is this one. So this would be the shift for me.
Yeah. Okay. Well.
So basically, probably if you switch to like 15-minute, there will be a proper it should have been a change of character, but it didn't happen because it didn't reach this point.
here.
Yeah, so from this is what I mean.
Yeah. Okay. Yeah. So we're in the daily now, and now we're getting into a nice, juicy daily fair value gap. And we're still deciding to go short. Why? Because we don't have a daily shift yet. There's nothing indicating that this pattern is broken, the downtrend is broken. We might have seen, like, this could be the panning move, and this could be the correction move. But yeah, it moved into that one.
Yeah, there is kind of a risk of price going into this fair value gap before reversing, but this current fair value gap still makes sense because like it was already tested here, so it can continue from this one.
Yeah, we could use Fibonacci as well. And we see that this is already the 50% line anyway.
Yeah.
Actually, it's already going into the OT zone, if I remember to draw it. I think my issue is that on my other machine, I have it the other way around. I don't know. Yeah, it's entering.
Yeah, I usually draw it from this point, like from the closest point to the right side to furthest point, and that's why I reverse it.
Mm-hmm.
It's just and it's just a habit that I have.
You've got some weird habits, mate. Yeah. So technically, shift would be here. So that's here. Sorry, that's really low. That's really low. Yeah, that would be throwing away everything. So we could potentially, especially because we're using the higher time frames, we could. I mean, I don't normally like to do it, but we could use the fair value gaps as shifts as well. Possible.
Yeah.
So that would mean that the shift would be on this candle.
I mean, we can just see if the shift works for now, and then yeah, if it doesn't work, then you probably stick to fair value gaps.
Okay. Yeah, sure. Did that? Yeah, that went higher. That went higher as well. So shift would now be here. That's technically, this is the low. The close is where we're close. Close 23.92. It's the same. Does that count?
That's like too marginal. I usually don't trade it when it's like visually on the same level.
It's not even visually on the same level. It is the same level. It's the exact same price.
Yeah.
Okay, so that it didn't do much, but now it's not. Now it's lower. Yeah. So technically, strategy says enter. This juicy sell side liquidity is just waiting to get taken out. It's just waiting. Are we going to be early? Are we? Is it like what Roman says, secretly trying to hint me that it's going to take out that top first? Possibly, but hey, I haven't seen this chart. Oh, not too quick, because we might see. Yeah, exactly. Jump back here. That was still within the fair value gap. So swing this we'll call this a swing. Let's not be crazy with this. Technically this would be the shift, but
yeah, I mean this could be, but like ideally to use this point, but sometimes we use these because they're just the closest fractal to the latest sweep.
Yeah. Okay. But that means that we can enter now.
Yeah, you can try.
Okay.
Yeah, just need to update the stats.
Wow. let's not put them in just yet.
No, let's keep the track of.
I don't want people to get scared. How much in the loss right now? How much? 4% drawdown. Oh my god. What's happening? The strategy is failing us, Roman.
Yeah.
We need to pivot. We need to find a different strategy.
Yeah, it's the most common mistake that every trader does. As soon as you get a couple of losses in a row, then you switch the strategy.
Yeah.
And yeah.
And then this happens as well, right? So as soon as you decide it's the last trade for me, that's when it says, you should have stayed in. Okay, so let's update the stats now. 2.5% profit. All right. Right. We had 3 positions, only right ones, and yet still profit. How is that possible? You don't know what you're doing. This strategy doesn't work. And yet I'm still in profit because we use risk management. It's all about the risk management. Okay. What's next? Next is this weekly fair value gap still. So
Yeah.
we could have targeted that, but we can also see if there might be another, like, this is going to be, let me switch to 1 hour. And let me see if we get entry into the fair value gap. We don't. Okay. We have reached the weekly fair value gap. Okay. So now we need to be a little bit careful that that the price might return now. Right? We can still continue until it really stops working, but
yeah, so like the first signs of reversal would be either 4-hour shift or daily shift to be even more conservative.
Yeah. So daily shift would be here.
Yeah.
So if it reaches that one, then we can say that we can confirm that there is a reverse. Well, it's clear. It's clear. This market is now going to the moon. Right. Load up, boys. We're going to the moon.
Well, yeah. Let's just check on the higher time frame what are the targets would be. Probably on daily, because on weekly, weekly there's this swing.
Yeah. And we have one there on daily. We have, well, it's the same, really. We have the
and
daily
still
fair value gap.
This fractal, I would say.
Yeah, there's a nice one there as well. Yeah, so we're hoping for a fair value gap right here that we can retrace into and then continue to go up, right? So we're not gonna, we don't have an entry here. We have to wait for a point of interest on the long side again. Okay, so we have this fair value gap here. So we're hoping that the price will dip into that. That's what we're hoping, right? But one can only
that's
hope.
actually also what I want to say is that having this shift combined with the fair value gap is also a pretty good sign. Usually it shows you that there is an actual strength to this market.
Yeah, exactly. So let's see if we can now enter on this fair value gap as well. And holy the question is there an entry? Well, yes, it's on the shift here. But let's say, okay, so wait, we're going to be going back to here because we went a little bit too far. And we have our fair value gap right here. That's another, it doesn't change this shift, right? So we could check to see, it is quite high again, but yeah. So because
and also if you switch back to daily, so this wasn't a shift yet, not the daily shift. Like it's pretty close to it, but Yeah, it's hard to tell.
It was a sweep. This was a sweep.
Yeah, so it's like, to me, it would be the question, like, from here, does it continue to go down from this fair value gap, or will it break through it and go up? So it's really unclear because we don't have this shift.
Yeah, but yeah, it's reaching a daily fair value gap here, but that's a target, right? It's not a shift or like a reversal indicator.
Well, to me, I would say, like, we have
the weekly as well.
Yeah, and we have this daily fair value gap, like these two ones. So this like inverse fair value gap. So it might reverse from this one to the downside.
Mm-hmm.
But yeah, we just need to see what happens because it's hard to predict.
Yep. But in any way, there is no daily shift. So right here we had the daily shift, so we're seeing this, and we could see the hourly shift. So we could see we could go long at least once.
Yeah, if you have the good enough targets. But also, I just realized if we go back to monthly, then we have this huge wick, which is like huge reversal sign. If you look back at the chart, every time you had the wick, you had huge reversal, huge drop after the week.
Mm-hmm.
This one, well, except this week, it was like weak, then up, then down. But usually this is the sign of the weakness, and it will just probably go down on the higher time frame.
Mm-hmm.
So yeah, I would use it to more focus on the shorts probably.
Okay. But okay, so in either case, we either find a nice shift on the long part with a good enough target, or we can maybe already start to look for a short if there's a fair value gap right here.
Yeah.
So we can leave the options open. Okay. So we see the price going up. Shift is here. That's quite a high shift. Price does go to it. So technically we can set our long like so.
It was the question, what will be the target?
Yeah. That is the question. Because ideally it would be this. I mean, technically, you could set it to the top of that.
Yeah, but you still have.
But that's not good. That's still not good. Yeah. So the only way would be to do that. Even then, it's nothing. No. I think we're gonna have to skip this one.
Yeah, there is a comment in the chat, by the way. Can you read it?
I see someone saying, "Good afternoon. It's my first time after seeing the live session yesterday evening." Nice to see you, Herman. But yeah, you would agree that this is just not this is the risk reward ratio is just not there. Like this is grasping for stuff. Like I'm a fan of playing with the entry order a little bit, but not like that. That's that's insane.
Yeah, this one will be too crazy.
Yeah.
And also the target, like fulfill of that fair value gap might be not reached.
No, it
is possible.
Yeah.
It might be fulfilled, but
with this move,
it may be too risky.
This move, it's not going to happen at once. It's going to be pulling down and then go up. Like if I was scalping, I would say this is a nice short opportunity because this is unsustainable.
Yeah.
Right. But in that case, if that's true, then we can look for a short because it entered the fair value gap and needs to take out this level first for that to happen. Okay. So we have We have some clear directions.
Can you switch to 1 hour? Oh, that's 1 hour. Yeah?
This is 1 hour. Yeah. Yeah. We need to. Need to clear this level first in order to look for a short.
Yeah. Yeah. So this is so-called inducement level that is usually being taken out before the reversal, if that happens. But yeah, I wanted you to zoom into this price. So yeah, like the only option to enter would be like from this fair value gap, maybe, or so we have the shift here, but since we don't have risk reward, then entry might be either here or here. And then I'm not sure if you have enough room for that 3 risk reward ratio.
No.
Yeah, but this would be like the only option where to put your entry, like here or here.
Yeah.
I suppose. Well, some would set it here as well.
Yeah,
but it doesn't work well in crypto.
Yeah, but the shift is here, so it's like it's really, really far. And obviously, normally I do change the entry order to make it a 3 at least, and then I can lower my take profit to still get that 3. But this, yeah, I don't know.
No, I mean, I noticed that trading on Forex, that usually like on Euro and British pound and also on gold, it usually reaches either this or this fair value gap if it appears.
Mm-hmm.
So like on Forex, it is a good entry, but on crypto, it is quite volatile and it might not get there.
Right. Yeah. Okay. So we do have that sweep, but now the shift is here.
Yeah.
So we get the same issue, but then in reverse. Still the same. Still the same.
Yeah, but it is. Yeah, you still have enough room to get a new shift.
Yeah. Yeah. If we get it now, that would be great, because now we're close. No. Why? I mean, technically, it's still valid, but
did it reach this point?
No.
Oh no, no. Yeah, it would be a good entry.
Okay, so we have the shift now here. I mean, is there something? Yeah, maybe we could potentially see something here. Potentially. Okay. Still nothing changed. Nothing changed. Okay. So, okay. We did almost fulfill this fair value gap, by the way. So we could have set our, like, it was there, like from that point.
Yeah, it was on this one. Well,
no, it's not even.
Yeah, but you didn't
look at it. It's not.
Yeah,
it's not. This would make it a 3. So let's put it on the chart. See if it was actually possible. If you had been able to catch the bottom, would it be possible? We have a shift. Yep, we have a shift. Not on this candle. It's on this candle. Okay, great. So we can go short, and we can find. That's nice. That's nice. That's a nice point.
Can you switch to daily? Is there any better target? Yeah, I mean this one is a perfect target.
Yeah, right.
But yeah, I'm just trying to see if there is anything else.
I mean, if you were a little bit more ballsy, then you might go for this one. But
yeah, true.
Conservative is better, and we might be able to get some order flow going downwards.
Yeah, I also wonder, like, maybe next time we should try to split the targets and have some higher targets.
yeah.
the second take profit.
Yeah, we could try that. See if that increases our profit levels. So let's make sure that we enter on the shifts. That's stop loss is there. That's good. Okay, let's go. No, come on.
No.
No.
Yeah, classic.
Oh, there we go. Do you still leave the trade? Yes, you do. Yes. Like what I got asked the question as well yesterday. When do you consider it finished? Well, when it almost reached your take profit, but it didn't. Like it didn't. It got halfway maybe. There we go. Nice. So we can safely say that this position would not have been getting your reward. So that's good. I'm happy with that. I'm also happy with this because that's done perfectly. Backtest 10%. Alrighty. Now we're getting into the double digits.
Yeah, that's the beauty of these higher time frames and higher risk per position. You have much bigger P&L.
Yeah. We do have a daily fair value gap right here, which we could see getting entered soon. Okay. Okay, so that's good. That's nice. A nice shift. And that's what I meant by the order flow part. So I'm hoping that this will then return now. Or now. Or now. Shift is a little bit less favorable, but we're still there. So can we still take this even though the daily fair value gap is still fulfilled? Yes, because it didn't close below it. So we're technically in the reversal part of this fair value gap. So now we get our shift, meaning that we can now enter on the short, like so. And then we can find the target that gives us what we're so eager to get, which is a 3 risk reward ratio. Now, okay, this is what I mean, right? So we got the conservative part, which is this first fair value gap now, because the other one is fulfilled really, or like pretty much. And now we're not getting the exact 3. So this is where I say, you know what? Then we can play a little bit with this one and then get our 3, right? But not something ridiculous like this. That's silly, right?
I mean, like this fair value gap could work as well. Like sometimes when I don't get enough risk reward ratio, then I use these fair value gaps. But this happened like on the second leg, so it doesn't look that good. If you had it like direct move down and then fair value gap, then I would use this one.
Yeah, I'm
but
liking
it
this.
had like 2-leg correction.
I'm liking this. 3.10. We might miss it. I mean, it is. Yeah. Because what is it exactly on that one? Oh, I could go. Yeah. No. Okay. You know what? That's fine. This is fine. This is as tight as it can be. I didn't even have to worry about that. Right?
Yeah.
Spending all this time finding the perfect entry, and it just says, yeah, nope. We're going to do your stop loss. Hey, and that's part of it, right? Doesn't matter. It doesn't matter.
Yeah.
Yeah, this is nothing because, well, let me just remove these lines. And this line. There's nothing here because this needed to take out this part. It's that simple. And it didn't. So there's no entry here. There won't be any entry here. So we need to hope for a fair value gap on the next couple of candles.
Did it take out this one?
Yeah.
This internal one, yeah.
Yeah, but is that something?
It's just an internal liquidity sweep. I mean, some would enter at this point, but I don't really use these.
No, I wouldn't either.
I mean, you can try to switch to 1 hour and see if there was anything.
Well, yeah.
So this sweep, and yeah, there is the shift.
Yeah. But are you
Like,
trading? Are you trading the
I
daily
know.
or are you trading the hourly? Then that's the question.
Well, it was daily sweep and then hourly shift. So that is still
Yeah,
the
but
strategy, and
but a daily
it's not
shift,
what we use.
it is a swing, but it is not. It's not a
No,
structural swing.
it's internal
Yeah,
liquidity.
exactly.
Yeah, I just know traders who specifically trade only this setup. So it's like daily shift, daily sweep, and then the shift on lower time frame. So it would work here, and it probably would work here as well. We can try it like at some point.
Yeah.
But it's completely different strategy. So it's not the fair value gap and shift.
Yeah, exactly. And I'm still in the phase of like keep it simple, right?
Yeah,
You'll be profitable with simple.
Yeah, and usually during the backtest, you want to stick to one strategy and not mix them together.
Yeah. Jeez, what is this? What is this? Oh, that's a nice daily sweep. Yeah.
How is that we spent like almost an hour and we only backtested 1 month on this chart?
Because it's difficult, man.
We're moving too slow this time.
No, we're really thinking about it. Like this was the same yesterday when, yeah, it was also like a really long period and very little positions. But because we're really analyzing, we're really trying hard to think what to do because this is difficult. It's not trivial. Like someone asked me, like, why can't we just easily automate this? If it hits the fair value gap and then a shift and then bam, all automated. It's like, yeah, but you don't want to take every single point of interest and a shift. That's the whole idea, right? You want to eliminate the bad decisions. But this market is not helping. I can tell you that. It's not helping.
Yeah, at least you can just fast forward.
Yeah, let's just. I'm over it. I'm over this move. I wanted to move. Why?
It's like usually, again, like after these moves like this, it what's happened in October. You either just like walk out from the chart and don't trade for a couple of weeks, or you set your alert to this fair value gap and hope that it will just touch it and then continue going down. That's usually what happens.
Yeah, because these wicks, they are a huge price magnet, right? Because there's so many people that are looking to enter here and then have a stop loss here. Like so many people would do that. So obviously, it's nice to move the price to that point, go below it, take up all the stop losses that were there, and then reverse the price. That's nice, right?
Yeah.
If you were smart,
and usually, what I want to say is that usually after these sweeps, like it takes out a lot of liquidity. So we see these millions and billions in liquidations. And then after that, there is no liquidity in the market. And that's why you see like, what was that, 2 weeks of nothing pretty much?
Yeah.
Because nobody had funds to trade. Nobody wanted to trade.
Yeah.
So yeah.
People get annoyed. I get annoyed. But right, we did, because this is a weekly fair value gap.
Yeah.
We swept this liquidity, weekly fair value gap. So we could potentially see a long reverse, right? Or we get a nice no shift, but we get a nice fair value gap entry on the short and we go and take this level, right? So that's...
Yeah, I would say, again, yeah,
I mean, daily
works,
shift is here, so that's quite high still.
Yeah.
Right. So best bets right now are fair value gap entry, taking out this one. But it's also possible that it goes there, and then there. Right. So I think we have two options here. That would be... This would be the thing to look out for, I'd say.
Yeah, it might happen.
Well, one of those two things is probably going to happen.
Yeah.
If you draw two directions, you're always right on one. If you say price is going to go up or price is going to go down, you'd be right. So that's good. Yeah. So we first get the fair value gap. Ooh, that would have already been a shift. But we have another trick up our sleeves. Because we can go from this point to this point, and then we don't see that half point. So maybe we need to wait until that reaches. Wouldn't you agree? Because it's a panic part.
What do you mean? What reaches? I missed it.
That we wait for fair value gap entry here, or maybe even half of the fair value gap instead of going here, because this is the shift. We could enter now, really.
Yeah. So can you switch back to daily? There was some example before that, I believe. No, can you scroll back?
Yeah, let me just remove this one.
Yeah, let me see. So either here, it was. So usually what happens, so like this, yeah, let's look at this one. So you have this fair value gap, and on the next candle after it was formed, you see this deep into the fair value gap, just slightest touch of it.
Mm-hmm.
And if you just look back at the chart, like here, for example, you can see there was fair value gap, slightest touch, and then go up. And it usually happens pretty much on the next candle after the fair value gap was formed.
Right, you've said that several times. Yeah, that's true. So if it's the next candle, then you could potentially enter on this one. So we could jump back here and say, okay, let's wait for that shift. Come on, give me. There we go. So then technically we could say, okay, thank you for the shift. That's the short. There.
Yeah. Now the question is, where's your take profit going?
My take profit will be on that nice blue line, I suppose. That I had for quite some time. And now we're getting into that area again where we say, oh, we're not quite there yet. Could we move it to this fair value gap?
Like ideally, it would be to keep your take profits to these swings. Like this is the safest point, of course.
Yeah, but then we get into. I mean, then we.
Yeah, it's really hard to get a good one.
I mean, this would be logical, right? If it's going to break, if this is the impulse move and the correction, and then we get another impulse move, it should potentially get to this level.
But what's this target? Is it monthly or weekly something?
It was this weekly fair value.
Weekly fair. Well, yeah, but on daily, it might take some time before it reaches this. So that's the problem.
Yeah, then we get a nice order flow, right?
Yeah, I mean, then it might happen that it will reverse into the middle zone and then correct to this one.
Yeah, I mean, I can't find another. Well, I can find a position, but then it would be this.
Yeah, this is like too close.
Yeah, it's too close.
Yeah, I don't know.
Strategy wise, this would be my best bet. If it hits a stop loss, it hits stop loss. Sorry.
Yeah, I mean, I have no problem with that. I just say like that fair value gap below the weekly one. It was, let me see, it was like.
It is old.
It's like 4 months old.
Yeah.
So yeah, it's in the long term, it is a huge magnet for the price, but it might be not the best target for the short term.
Yeah. Well, we're probably going to see stop loss by the sound of your voice. So it did reach that level, and technically we could have taken the position, but that's just grasping for stuff, I suppose.
Yeah, I agree. I mean, it was just no good entry following this strategy.
Yeah. Okay. Well, it's fine. No problem. Statistical error. then
Yeah, I mean, the only inconsistencies that I noticed is that previously you entered the position with a pretty conservative targets that were pretty close.
yeah.
Like this one, it was pretty close. Instead of targeting this one, you targeted this swing. But this was a pretty optimistic target with a pretty risky entry.
Yeah, so the best thing to do in this case was just to skip it.
Yeah. If you didn't get your risk reward ratio at this point, at the swing, then probably it's better to skip it or reduce your risk. I don't know. Yeah, I'm not sure what's better.
So now we still have this shift or fair value gap entry. So any reversal sign now is also fine. But I don't like this candle. But there's plenty of room for a shift, I suppose.
Oh, I remember this candle.
You do?
I remember trading Bitcoin. Yeah, in the beginning of the March. Yeah. I failed.
But this is annoying. Like, this is so annoying. Like, come on, Link. Give us something. Like, how can you just go up like that and then just go down like that and then... Oh, another sweep. What are you doing to me?
I remember exactly that day.
What are you doing to me? And there is a, like, technically, there is an entry. We're going low. This would be the shift. So?
Well, yeah, you can try. What is your point of interest? Is just liquidity sweep?
Yeah.
Yeah, okay.
And now we can probably be... so it's this... Yeah, this one. And see if we can find some kind of entry. Yeah, that's good enough for me. But not good enough for Link. So when do you remove the position? Now. Right, you could set up an expire position at, and you could set it like that, and the system will clear it up when it does that. So that's nice and easy. This, but there was no, there just wasn't any entry. It just wasn't there. Yeah, that's also part of the strategy.
Soda asks if there is a video to watch after that event.
No, there was no recording made. Only some still.
Yeah, but I believe Soda already knows pretty much everything.
Yeah.
From all the streams.
The information was like it's a condensed version of the Academy part. Oh my God, this market blew my head in. Because what do we do now? What do we do now? Oh, we can end the stream. It's 3:00. Saved by the bell.
It's the best solution. Was it also fair value gap fulfill? I wonder if this could be the entry to the downside, or
this is a fair value gap fulfill.
It was fulfilled already
on the daily, but there was no entry. So this is not like it was fulfilled already. So this fair value gap was gone, and there was no short entry here because there was no shift was here. Okay, yeah, let's enter here. No, and then you get another sweep. So technically there could have been an entry here.
Yeah, there was a shift on 1 hour.
Because this one. Should we try that one more time?
Yeah, it's up to you.
Yeah, why not? That'll be the last one. I have no idea where it's going to end. I would not set the target to what we just saw on the screen, so that's fine. Like that. I mean, conservatively, is there anything? Yeah, this one.
Yeah, this is too close.
Is it? Because there's a fair value gap right here. Yeah, that gives us a 3.
Okay. Yeah, but I mean, yeah, okay. Never mind.
I mean, we might not get there, but we might. We might. We do. Nice.
Okay, yeah.
Nice.
Yeah, what I want to say is that there is that target that is much closer now that you wanted to target.
No, it's not. Yeah,
I mean this one.
Yeah,
You
but
targeted from here, but now it is much closer. But yeah, after these sweeps, I would not target this one. I would not bet that this will be taken out. I would expect to see some price going up.
well, we can see. I mean, this was a good trade. Good close.
Oh, yeah, it went up.
Oh, Link, what are you doing to us? All right. Well, the question is, were we profitable on this very hard
yes.
and difficult market? Yeah, we were. 13%. That's still good. Still good. It was a very difficult market.
It was 2.5 months.
Yeah, so 6.5. And a very difficult market, still 6.5% or 6%. Yeah, 2.5. Yeah. All right. Okay. Let's say 5%. Let's go 5. Average 5. Okay, fine. Yeah, so I asked someone as well yesterday, like, what is your expectation of profit per year when you trade this strategy? And his, like, obviously after my talk, so maybe it's probably my fault. I'll hold my hand up because I said you could get really nice profits, like 20%, 30% on a back test. It's there, right? But realistically, how much do you think you can get in a year when you have all the market shifts and all the things? And he's like, oh yeah, maybe 100, 150%. I was like, that's not realistic, especially if when you just start out. Like, that's not going to happen. Realistically, 40%, that would be good. You do really well if you get 40% profit trading this strategy.
Yeah, I mean, if you just combine like 5 markets, then it's possible.
Yeah.
But yeah, it takes a lot of time to practice.
Yeah. So yeah, I think on that note we can close the stream. Bye everyone. Bye.
I mean, it was a good one. So
yeah, was yet another profitable backtesting session, and we didn't know, or I didn't know this was going to happen. That's why I closed it there. Otherwise, I would have come up with some random thing of why I would set my target there. But then I probably would have had a different entry as well. So it would still come to around a 3 risk reward ratio.
yeah, maybe 4.
Yeah, I would
Let me
just
check. It was 4 in the 6 if you would enter the shift.
Right. Yeah. So that's
but
what I want to be.
What I want to say is that you had one option to set the take profit like this one much lower. So it would be almost 2x. So instead of 3, you would get 6. And then this one would be 4, 4.5. So it'd be like plus 4%, almost 5.
Yeah.
But I mean, yeah, I still like your strategy with taking these more conservative take profits.
Well, I mean, especially
especially
if you can move the entry part slightly, right? Not ridiculously, but slightly. If you can do that, it doesn't matter because if you can enter earlier and have more chance of getting into this trade, but the result is still similar, like maybe a little bit over 3, or if the shift is good, then you can get a 4% or 5%. But yeah, doing it like this, then you've already got the money. You've already got the 3%. You've already got the 3%. It's fine. Like you sleep so much better knowing that this already happened. Yeah, okay, maybe you get a little bit disappointed and disheartened that you're like, okay, I should have just held longer. But that's gambling. Then you're gambling. But maybe that's good for the second take profit.
Yeah, exactly. So it's good for the second take profit. And also when I did my backtesting, most of it last year, I also analyzed how many times. So after the shift, I realized how many times the price goes into the fair value gap. So beyond the shift.
Mm-hmm.
And it was a pretty consistent, but it really depended on the market, because some markets, it exactly went to the shift and then reversed. But then some markets, it went much higher and allowed you much better entries. So it's also the question of backtesting and analyzing what works on which market. So as I said, on gold, it pretty much always goes into the fair value gap beyond the shift. So you can get much better entries.
Yeah. But on crypto, especially on, well, it just depends on the market, I suppose. Like the link has got wild moves. Like,
yeah.
The swings, the candles are very far apart. But yeah. Anyway, it was a good stream. Tomorrow we'll have another stream where we do the market overview. So we're going to be looking at the current markets, not the historic markets, which is obviously just as important because you might be able to see some entries. And we'll probably do a little bit more analysis on, or at least more, like we'll show you a little bit more on how to prepare yourself for entries, things like that.
Yeah.
Right. All right. So we'll see everyone tomorrow. If you're watching it back, that's also fine.
Yeah, there are a few more comments. You want to respond?
Oh, yeah. Herman says, thanks. I'm going to take a good look at the trading site. That's really good. And have a nice holiday. Thank you very much. By the way, 1.13 in 2.5 months is about 1.5 a month and 80% in a year. Well, there you go. There you go. That's, I mean, can you get 80% on an ETF? No, you cannot.
Yeah, but like, to be fair, it's pretty hard to keep that even 5% per month consistently.
Yeah. Yeah, because right now we've done it in a couple of sessions where we do market reversals. So at some point there's going to be a shift. So we're going to be looking from long to short, and it's going to be like a massive like here from, come on, this would be favoring longs, and there we would be like short, long, short, right? But we did, I suppose we did do a little bit of a swing. That's why,
the direction.
That's why this was a difficult session, right? If you
but still,
yeah,
you got the direction pretty good. So you had the shorts from here.
Mm-hmm.
Then you expected the longs from here, but you just didn't have a good target.
Mm-hmm.
And then you continued your shorts. So yeah, it was a pretty good reading of the structure.
Yeah. Okay. Well, that's at least something to take away, right? So and just to recap, I based those on the high time frame, so the weekly, monthly points of interest. If it reaches those, then a return is likely. And that's when I decided to go in the opposite directions.
Yeah.
All right. Sven was late, but he was there yesterday, so great. I'll look it back later. Yeah, why not? Have fun, enjoy, and see you guys tomorrow. All right. Thank you for watching. Have a good day. Thank you, Roman.
Goodbye.
Bye-bye.